There is no doubt that we are currently facing a new banking crisis. The question then becomes, how can we take advantage of this situation and maximize our investment portfolios? In this video, we'll share some tips and strategies on how you can take advantage of the current situation to grow your wealth. Specifically, we'll discuss how you can benefit from the crisis through stocks, Bitcoin, and more. Understanding the current banking in recent years, banks have been experiencing a variety of challenges, from low interest rates to increasing competition from fintech companies. Additionally, the COVID-19 pandemic has caused significant economic disruptions, leading to loan defaults and financial losses for many banks. Another contributing factor to the current banking crisis is the low interest rate environment that has persisted for several years. In an effort to boost economic growth, central banks around the world have kept interest rates low, making it cheaper for people and businesses to borrow money. However, this policy has also led to an increase in risky lending practices, with banks and financial institutions offering loans to individuals and businesses that may not have been able to afford them otherwise. Finally, another contributing factor to the current banking crisis is the ongoing digital transformation of the financial industry. Traditional banks are facing increased competition from digital banks and fintech companies, which are disrupting the traditional banking model and changing the way people interact with financial services. This disruption has put pressure on traditional banks to adapt to changing consumer preferences and technological advancements, which has been challenging for some. As a result, banks are struggling to maintain profitability and investors are becoming increasingly concerned about the future of the banking industry. But how can we benefit from current banking crisis? Here are some tips. Tip 1. Invest in bank stocks. One way to benefit from the banking crisis is to invest in bank stocks. While banks are facing challenges, some of them may still be good long-term investments. Look for banks with strong financials and solid management teams, as well as those that are adapting to the changing environment through digital transformation and innovation. Tip 2. Consider investing in fintech. Another way to benefit from the crisis is to invest in fintech companies. Fintech companies are disrupting the traditional banking industry and are likely to continue to grow in the coming years. Look for companies that are innovating in areas such as mobile payments, lending, and digital banking. Tip 3. Diversify your portfolio. As always, it's important to diversify your portfolio to manage risk. Consider investing in a mix of bank stocks, fintech companies, and other assets such as real estate or commodities. In regards to stocks, investors can capitalize on the current market downturn by identifying undervalued companies that have the potential to rebound once the economy recovers. It's important to do thorough research and analysis of a company's financial health and stability before investing. This can be done through reviewing financial statements, earnings reports, and analyst reports. Tip 4. Invest in Bitcoin. Another option for investors during this crisis is Bitcoin. Bitcoin has been touted as a safe haven asset and a hedge against inflation, making it an attractive option for those looking to diversify their portfolio. However, it's important to keep in mind that the cryptocurrency market is volatile and can experience significant price swings. Bitcoin is a decentralized digital currency that has been gaining popularity in recent years. While it's not without risk, Bitcoin can be a good way to diversify your portfolio and potentially benefit from the current banking crisis. Bitcoin is not controlled by any central authority, making it less susceptible to the challenges facing traditional banks. Tip 5. Educate yourself. As with any investment, it's important to educate yourself before investing in bank stocks, fintech companies, or Bitcoin. Read up on the industry, follow news and trends, and consult with financial advisors to make informed decisions. Tip 6. Look for opportunities. While the banking crisis may be causing challenges for some, it's also creating opportunities for others. Look for areas where you can add value, such as investing in distressed assets or providing alternative sources of funding. Tip 7. Consider peer-to-peer lending. Peer-to-peer lending platforms connect borrowers directly with investors, bypassing traditional banks. This can be a good way to earn higher returns while also helping to fill the gap left by struggling banks. Tip 8. Explore alternative investments. Finally, consider exploring alternative investments such as private equity, venture capital, or hedge funds. These investments are often less liquid and more risky than traditional assets, but they can also offer higher returns for those willing to take on more risk. Additionally, Investors can also look into investing in distressed assets such as real estate or businesses that are struggling financially. These assets can be purchased at a discounted price and have the potential to increase in value over time. Overall, the current banking crisis is creating both challenges and opportunities for investors. By following these tips, you can potentially benefit from the crisis through investments in alternative assets such as stocks and Bitcoin. It's important to keep in mind that these investment options come with their own set of risks and require proper research and understanding before making any decisions.
When you made a bit